have a holly jolly Christmas. It's the best time of the year. Oh, my jolly, have a holly jolly Christmas this year.
This is Invest with Jacob. All right, guys, it's Christmas week, and generally this time of year, the market is bullish. We're in the middle of our Santa rally, and everybody's pretty happy. However, Santa has had trouble getting his sleigh off the ground this year as far as the market goes. And if you're a big fan of the movie Elf like I am, you know that his sleigh flies on Christmas cheer, and the best way to spread Christmas cheer is to sing loudly for all to hear. So I had my daughter sing you a little Christmas carol and say, Merry Christmas, Happy Holidays to everybody out there from my family to yours. I'll get into the market in just 1 second. But first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the S&P 500. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, so the market sold off again today, a big sell-off into the late day and then a bounce and a little bit of a rally into the close. And now in the after hours, it's starting to push higher again. So we got to find out, is this going to be a real rally or is this just a corrective bounce? So let's jump into the chart and take a look. Okay, guys, here we are on the 1 hour futures chart. And since we've made our high back here in November, okay, the market has had trouble finding its footing and picking a direction on which way to go. And what that tells me is we're just in a larger corrective pullback, and we're looking to find a bottom where we can start our next rally from. So from that high, we have a few different interpretations of this structure. And it's a little bit complicated because the ES is tracking just a little bit differently than the cash market or the SPX. Okay, so the S&P and the futures are tracking slightly different. So our first path that we're going to go over is our bullish path. Okay, and this is the most immediate bullish path. So that high, we're calling that wave 3 of a lesser degree. Wave 4 was the low on December 3rd. Okay, we got our wave 1 high on December 16th in the overnights. And then the low yesterday was our wave 2 low. And should this rally be a 5-wave rally up, then we would call it 1 of 3. We would look for the pullback in 2 of 3. And at that point, we would look for a rally up in 3 of 3 to start us toward that 49.50 region. That's the most immediate bullish count. And it really, really depends on what this rally looks like. It needs to be a 5-wave structure, a very clear one. And if that is the case, we come back and we hold the support level and then move higher and take out that high, then it's very likely we're on our way towards that 49.50 region. Okay, so the bulls still have a lot of work to do to make that happen. They got to get this high in a 5-wave structure, pull back and hold support, then take out that high and continue moving from there. Okay, so the second path that we are tracking is going to be our first bearish path. So we're tracking 2 bearish paths, and I'm doing them in order of likelihood. Okay, so with the move down, okay, we're going to call that A of the triangle down. Then you would have B in the triangle, okay? Now, this is where it gets a little complex because, as I said, the SPX and the S&P 500 and the futures market are tracking just a little bit differently. And so when you see the lines of the triangle here come in, they track just a little bit differently because the SPX did not go get this higher high here. It actually had a lower high, which is why the triangle line is down facing on this chart. Even though I'm on the futures chart, I'm showing you the path of the triangle so that you understand when we go through this, if they do follow through on this triangle, where I was able to come up with that idea. And that's because this high was in the overnights and the cash market never went and got that high to give that chart a higher high. So it actually has a lower high here, which creates that triangle setup. And that's why you see the line through cutting off this high here. Okay, so with that, that high was the B wave. Yesterday's low was the C wave. We would be rallying in D up and then E down to complete the triangle in the larger degree wave 4 in this case. Okay, our 2 bearish structures trace out the larger degree wave 4. The only bullish structure that keeps the smaller degree wave 4 alive is the one I already illustrated. Everything else takes us in the larger degree wave 4. Okay, so you would look for a rally up in D, then a pullback in E before starting our next rally up. So that's the first bearish scenario, and the one I think is most likely. I'll tell you why in just a second. Because this rally has moved up over 45.85 and has moved up pretty aggressively to that level, it's less likely now that it'll come back and take out this low. It's not impossible. That's why we're still tracking it as an option, but it's the less likely of the 2 bearish options. And that option is we come up and fail, and then it nosedives and takes out this low, which is the black line I have drawn straight across here. If it breaks that black line at it's like 44.95, somewhere in there. If it breaks that black line, okay, then it's very likely we're headed towards 43.50 in a pretty quick manner at that point. This low becomes pretty important for holding up the entire structure. Okay, if it takes out that low, it's very likely we're headed down to this 4 in the 43.50 range. So those are the paths we are tracking. The first one is the bullish path, okay? And I'm still skeptical on the bullish path, guys. I'm not saying it's the primary. I just did it first because I just do the bulls first. So bullish path, I'm still skeptical on until this rally proves itself. It needs to be a clear 5-wave structure, okay? And once we get that, we'll call it 1 of 3. Look for the pullback in 2. And then they have to rally again and take out that high from 1. If they do all that, it's very likely we're headed towards that 4,900 region. For the bears, this rally comes up in a 3-wave structure. Okay, it's more likely we're in this triangle. We come down in E, and then we'll look to rally from that point. Or if this rally fails pretty soon here, under 4,600, then we will look for it to nosedive and come down to this 4 down here. So we have our key levels. This low is our key level for this 4. Okay, and then we have our structures here. We need a 3-wave to keep the triangle going, or a 5-wave to keep the wave 3 idea going. So that is what we're tracking today. Guys, if you like the information that I put out in these videos and you want real-time market updates from me, you need to get in my Facebook group. There's a link down in the description. Go ahead and click that link and it'll take you over to Facebook. You do have to get approved to get in my Facebook group, and the only thing I ask is that you subscribe to my YouTube channel. So hit that subscribe button down below. You might get another Christmas carol from my daughter this week. Who knows? Hit that subscribe button. Come on over to Facebook. I'll get you in the group. And here's how you get the most out of my Facebook group. You come to this featured tag right here. And you hit that. Once that's there, you scroll down. You'll see our documented trades. That shows everything we've traded since I started the channel. And then you scroll down just a little bit further and you see a link to my Slack channel. Now Slack is just a free chat channel, and I'm on there all day giving out my real-time market updates, buy and sell alerts, and answering all of your questions. It's a very talented group of traders from the very beginner to the very expert, and it is a great place to learn or improve your trading. So come on over, guys. Let's make some money together. All right, guys, key takeaways for today. We're watching this rally. If this rally can continue higher and create a 5-wave structure off the low, so we're looking for 1, 2, 3, 4, 5, probably up close to this high right here. If we can get that, okay, then we get a pullback and then higher than that high, it's very likely we're on our way to 4,900. If we get a 3-wave structure up, it's very likely we're in this triangle. We'll come back down in E and look to rally from there. And if it nosedives and can't push up much higher than it has right now and turns down and breaks this low, then we're looking down at this 43.50 region. All right, guys, that is the market update for today. I will talk to you tomorrow.